Good day traders, welcome back to my channel. So today is the market close. We're gonna take a quick mapping, quick analysis, and quick of finding key levels for gold spot against US dollar for the incoming week, which is will open on 9th of February 2026. So without wasting any time, let's have a look. All right, I'm gonna start with the weekly candle. As we can see here, we can take a look that last week the price unable to close this level, but it visited the early January candle, visit this area, and then started to go up. So what we're expecting here, I'm just gonna put it this level, and then this level over here. All right, so please remember that this is uh January 26th candle, and then yeah, obviously this is our all-time high. This is our all-time high, and this is our last week high. So right now we can see we are kind of ranging at the moment. And what about daily? Let's take a look at daily. Now this is the good part. So this is daily. We're just gonna put blue color, which is I mark for daily because it's easy for the daily to be seen. So here you can see here, you can see where the price last week and where the price is low, the pivot area, which is the previous week low and highs. So now I'm going to go to the hour 4, and here we can see what is going on with gold. All right, so now let me know every key level, okay? So I'm gonna put this is our premium. This is our premium. Why I took this area, because if we take a look at the minute 5, this is the place where the price has been retested, and we have an order block that keep on going down, right? So we go to our 4 once more. Oh, there it is. All right, so now that we can see here, now this is the interesting part, because this area over here is a big selling, but we're gonna go through that sooner. Now here we have another selling area. It's good that we can see it clearly now, as we already mark our weekly and daily candle, so we know where the price will go. So we can see here we have another bearish on the block. Now I put this area over here because this is the best area over here, and the impulsive move going up. So this is, we have our other block, bullish other block, that's going up, but soon has been broken with the bearish other block. You can see here the price going down, retrace, refuse to go up, and then we can see here it retrace again, and boom, we have bearish on the block on this area. No, I mean it's break a block, and then the price retest and make another block once more. So now we are seeing over here, which is strong, which is a strong buying area, right? So this is the buying area where we expect that the price will go up. All right, why I put this level, because we can see here this is the previous, this is actually a gap, it's actually a gap, but if the price go up and then retrace here, over here we can see it retrace and then make an impulsive move going up, and then we have a breakout and everything. So we have a order block on this level, the price retest this area, and we have an order block. All right, Now, before we continue, I want to all of us to understand what is the market structure right now. All right, because it's different time frame tells different uh different structure. All right, as we can see here in the daily, we're still on the bullish, which is the bullish trend, which is an uptrend, because we don't see any candle close above this level. Now if if any of daily candle close on this level, we have a bearish market. All right, we have a bearish on the daily time frame, but uh right now the daily is the 4 hours chart is telling us that we are on downtrend. So because over here you can see over here is the market structure shift or change of character, which is it's going down, and then the price retest. Now this is the perfect one because we have a change of character going down, retracement going up here, and back to the change of character level and start selling. But right now we can see that the 4 hours chart unable to close above this level or above this level to make a break of structure. So the price respected this level and started to go up because this is a gap actually. So the price started to go up, so we kind of ranging at the moment. And if I'm not mistaken, this coming week there will be a lot of news. There will be a lot of high impact news, a lot of data, and depends also if there's a lot of geopolitical tension going on. So so gold might make a big move this coming week, right? So right now we can see, if we take a look over here, it tells us another story, because yeah, we can see here it might be tested. Now we have a retracement and then going down, but we can see here right now after a strong impulsive going up after a breakout, we can see that here we have another order block, which is I'm gonna put a gray area, because if the price retrace over here and unable to close on this level, we might going up once more. But if the price break this level, you might wanting to buy on this level, which is, I forgot to put our discount level, is this area. So this is our discount, right? We can put it on this level, but can put over here. But from what I can assume is it can be on this level too. The price can retrace to this level and then going up, right? But that's for another story. We just wait for the reaction, because we have, if the price touch this level, we will have break of structure or liquidity sweep to go up. All right, but from what I can see over here, we are actually in a retracement. We take a look at the daily time frame. We have a break of structure on this level, and then the price is actually retracing and right now trying to make another break of structure, but now it's charging up. So if the price fell to close above this level or touch this level over here, then we will have a strong selling market on gold. So the 4 hours chart, back to the 4 hours chart. All right, so what I'm expecting for this coming week is the price will go on this level, and I'm wanted to see the reaction of the market, how the price will react to this level over here on the lower time frame on the block, and this level over here, which is our, it could be our future discount or this could be our future premium, but it depends on the market. if the price reject once more, then we have another premium over here. And from what I can see here, you see the price going up and then the price goes down. So there's a lot of area where gold needs to break. All right, if this one fails to break, then it have to break this level, because here we can see that we have another support become resistance, and over here we have another strong selling pressure on this area. All right, so it's a gap, the price break and sweep, and then playing over here, then the price retrace and goes down hard. Right, so we have a strong bearish market, but we also have a strong, you might also have a strong bullish market. But if you ask me now, if I have to focus how the market will react, I'm not very sure, because we have a ranging market right now. But if 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 I have to, let's say I'm gonna give a scenario which is a bullish scenario. All right, so if the price, let's say the price could maybe make a gap down here, could make a gap up here, so let's just assume wherever the gap is. All right, okay, let's say the bullish scenario, it goes up. All right, it goes up, and then let's say we have a 4-hour candle close on this level, so it might play around this area, and then you might seeking a breakout and going to test this level. I'm not gonna say it's gonna be a lot of movement, but if we have to make a channel over here, I think the price will move like this. All right, the price will move like the channel that I'm doing right now. Let me just, no, let me just move it. So yeah, like that maybe, but we never know. And if the price is going bearish, now this is for the bullish, but if it's go bearish, let's say the price go here, maybe it can go straight back down, but we will have a retracement. Let's say it goes back here and then going hard to this level, it may be playing around, and then we'll have a lot of sideway before the price make a break of structure. And I know that my arrow is kind of ugly, but let me do it again. All right, so let's say the price here, manipulate, and then it goes back to the discount, sweep it, maybe around here we'll have a sideway, and then we will touch this level, and direction on this level might never know. But what I know for sure is the market right now, if we take a look at the, let's just have a look at the minute one time frame, and we just take a look. Right, so for one candle, one big candle, it can goes to 500 pips, it can go to 50 pips. All right, so there's quite a lot. Now if you go to minute 5, okay, one big candle of minute 5, it can cost around 100 pips, right? 100 pips. All right, let's see here, see, it's quite a lot. It's 100 pips over here, and even the smallest one, let's say on the active market, let's say let's have a look at the Friday. Oops, sorry, Friday, 10 p.m. Yeah, 10 p.m. Now we can see even at a smaller candle, 10 p.m. No, I cannot find. Okay, this one. Oh, this one is almost 9. I think this is the smallest candle I can find. Maybe I'm blind. Okay, even the smallest candle is 80 pips. So if your stop loss is around 60 pips, 50 pips on scalping or intraday, you might get swallowed by the market. You will be liquidated because even the impulsive right here, let's say you put, oh, I'm gonna buy long on this position, right? I see over here, you can see over here that it's support become resistance. I'm gonna buy long. I'm just gonna put, let's say, enter on 4899. So 4894. 4 is my stop loss. See, it just barely touch it. Just barely touch it. And you are so close to the stop loss. So you need a breathing room. Let's say for 899. I'm just gonna put it on 4880, 4890, 890. So it's quite a big margin. It's because if you enter here and then you have a stop loss like below this level, you might get hit. You might get hit with the stop loss and everything. So the smaller time frame candle right now is quite expensive. So what we're gonna see here, we just wait for the exact session, the best session, the highest volume, highest volatility, and if possible, try try not to stay too long in the gold spot against US dollar market right now because it's very volatile. But right now it's cooling down. From what I see, it's cooling down. Okay, it's cooling down already. So yeah, you might see that the gold, if the gold is entering this 25 below 30, is we can consider a normal market. But if it doesn't, then we just be careful with the market right now. All right, so this is US dollar. It's getting quite strong, but I think it's the, let's take a look. We might see that the US dollar will go down from what I can see over here. Maybe there's a possibility that it will, that the possibility that US dollar will be decline. All right, so we have a strong uh bullish on the gold spot against US dollar. All right, so this is my analysis. um just don't take this video as a financial advice. Anyway, my video is kind of boring and it's too long, but please don't take this as a financial advice. If you want to use it just a confluence and a confirmation for you. All right, so thank you for watching my video and good luck with your trading this incoming week. Hope you guys have a good profit and feel blessed this coming week. Thank you.